Welcome to Equity Mates Investing, a podcast where we explore what's possible in the world of investing. If you've just joined us for the first time, a huge welcome to the community. Cannot wait to get stuck into it today. My name is Bryce, and as always, I'm joined by my equity buddy, Ren. How are you?
I'm very good, Bryce. Very excited for this episode. There's a lot happening in markets.
Yep.
Today we're going to cover off on the news.
Yep.
We're going to then turn to reporting season, both here in Australia, but we're also going to talk about the company at the tip of everyone's tongue,
Yes.
that is Nvidia. And then we're going to change pace a bit and finish with our not financial advice segment. We're going to celebrate some of the worst financial advice we've come across on social media.
Not sure if celebrate's the right word,
Yeah,
but yes.
yeah, celebrate, yeah.
Yeah, can't wait for that. But let's get stuck into it.
News and markets.
All right, news making headlines. We've got inflation, Berkshire Hathaway, and Ray Dalio. So, Ren, Australian inflation fallen to 3.5%.
Yeah, let's start with the good news. So the 12 months to July, inflation at 3.5%, down from 3.8% in the 12 months to June.
That does sound good.
Sounds good.
Yes.
But the devil is in the detail.
What's the catch?
And well, this isn't really the devil, but the catch is the big energy rebates that different governments are giving in Australia. So the federal government in the budget announced a $350 energy rebate for everyone. And then different state governments also have different energy rebate programs in place as well. So if you look under the hood at the numbers and what has driven this slight fall in inflation, the biggest driver was a 6.4% fall in electricity prices. If you were to take out the government rebates, electricity prices actually rose 0.9%.
God.
Now, what that has translated to in terms of the overall inflation number, they think it's about 20 basis points. So 3.5 would go to 3.7 in one analysis that I read.
Okay, so it's a bit, not misleading, but it's not something that we can wholeheartedly say we've brought inflation down.
It's not sustainable. It's one-off.
It's a one-off.
Yeah,
So we'll actually be waiting for next month's figures to see.
Well, yeah, I think if you exclude the energy price impact, it's kind of like 3.8 to 3.7. It's like it's not moving.
Yeah.
And it's got to get back in that target range before they cut.
Definitely. Yeah. It's getting closer, edging down 2 to 3%. If you've just joined us for the show, 2 to 3% is the target range for the RBA. So whilst 3.7 sounds close or 3.5 sounds close, this is the hardest part in most instances to get back into that band. So we'll watch this space.
Speaking of inflation, let's move to the second news story. Someone's wealth is inflating at a rate of knots, and well, actually a lot of people who also invest in this company.
Yeah.
But Warren Buffett's Berkshire Hathaway is the first American non-technology company to reach the $1 trillion value.
Yeah, it's an amazing story. So last week it hit $1 trillion. As you said, Ren, it's joined Apple, Nvidia, Microsoft, Google, Amazon, and Meta. They're the 6 companies that have also surpassed $1 trillion.
You've missed one.
Oh.
One big one. The only other non-tech one.
Who? I don't know.
Yeah, you do.
Do I?
Yeah, you love this company.
Do I?
Yeah.
I bet I don't now because you're saying that.
You have a lot of your wealth tied up in this company.
No, now you're really
Big believer.
sending me down a rabbit
Not
hole.
American.
No, can't
Oil.
think of it. Not Exxon.
No. Middle East.
Oh, Aramco.
Yeah, Saudi Aramco. Yeah. So that's the only
True,
other...
love that company. Not. Anyway, yes. Now, to put it in perspective, the share price has gained 5.6 million% since listing. It's risen 5.6 million% since listing.
What does that mean in terms of wealth?
Huge. Well, Buffett owns, I think, about 14% of the company and he's worth about $150 billion.
So every $1 invested turns into $56,000.
Yeah. Pretty incredible.
Which, I mean,
doesn't sound
as impressive as 5.6 million. But yeah, it's pretty amazing. Buffett still owns 14%, so his wealth is around $150 billion.
Yeah.
But yeah, it's just a pretty incredible story. I mean, It doesn't mean anything. It's just a number.
Yeah.
Like the company is no different at 900 billion or 1.1 trillion. But it's just... It wasn't so long ago that companies being worth $1 billion was crazy.
Nuts.
Like that was in our lifetime.
Yeah.
And now companies are being worth $1 trillion.
Yeah, or multiples of.
Yeah.
Yeah. Stock up 28% year to date. I'm a shareholder, Class A, holding on to it.
No,
now.
you're not.
Yeah.
Class A?
Fractional, yeah. I got it before. I got it through stake, and I got it before they stopped doing fractional.
Oh, I didn't realize they did that.
That's why I'm holding it. I don't need it.
What? How much of a fraction of it do you have? Tiny fraction, I
About
imagine.
half? No, tiny fraction.
So
fraction.
For people who are unsure of why we find that funny, the Class A Berkshire Hathaway shares trade at about $700,000, just shy of that. And then the Class B is the one that the majority of people own because they trade at about $450 US.
Yeah.
A bit more accessible.
Yeah. So I'm just holding it as a token. It has done very well. I got it when it was in the 400s. So, yeah.
And Buffett hit it 2 days before his 94th birthday.
Yes.
So happy birthday to Warren Buffett.
What a guy. Anyway, our final story is an interesting one. Ray Dalio, owner and former CEO / portfolio manager of the world's biggest hedge fund, Bridgewater Associates. He now wants his voice to last forever.
Yes.
He wants to create a digital version of himself powered by generative artificial intelligence, where essentially he uploads his voice and all of the writings and principles that he's done over the years with the hope that you can have high quality interactions with him, and he can in return have high quality interactions with you. I find it so weird.
Yeah.
I find it strange. I find it narcissistic and a bit self-centered.
And you want to do it as well?
No. We could do it.
I think that narcissism is the word that comes to mind. The last few years has seen a real revision of Ray Dalio. Like he was kind of lionized as this like great thinker, and like he's been incredibly successful. Like no one can deny that. But he released principles, and everyone, gravitated to him as this like great systems thinker in terms of like managing this much money and building such a big team. But in the last few years, I feel like everyone's kind of revisited Dalio as a person, and narcissism is probably one of the major words that come to mind. There's this book, The Fund, that looks at Bridgewater, and the guy that wrote it, Rob Copeland, I think wasn't a big fan of Dalio, so you have to take it with a grain of salt. But some of the stories in there, wild. So one time Dalio leaves a meeting to go to the bathroom, and he sees there's some pee on the floor in the bathroom. Institutes a company-wide investigation to find out who peed on the floor, and just so over the top, like security reviewing tape, weeks and weeks of interviews, just crazy. Another story, he did a 6-week inquest into the state of whiteboards at Bridgewater's office.
Are you kidding?
There's stories of him like just hounding people, like making a senior executive cry in front of like a room full of people, just doggedly hounding the catering staff. But then also weird things, like at a company retreat, he ordered a group of mostly female executives to sing to him.
What?
Yeah, like he's just a bit weird.
One of those organizations I feel you go to work for because of the reputation and the fact that you would be working for this guy, and then you get in and it becomes this weird, not like cult, but
and like that's all, that is all what it is. And I pulled some of these stories from an FT article that we'll include in the show notes. But the thing that really gets me is that the facade of like the great two-way communicator and people manager is starting to shatter as well, because that was like at its core, a lot of his principles book was like honest feedback, of that stuff. And he can certainly give it, but it seems like there are these stories emerging that he can't receive it as well. He had the historian Niall Ferguson come to the office, and he and Niall Ferguson had this conversation around history. And Ray Dalio was positing this big story about how you can model history and you can accurately forecast which empires will rise and fall. And Niall Ferguson just said, you can't, like, that isn't that's not accurate. You can't do it. Apparently Dalio just like lost it on stage and lost it at Nile in front of like a room full of people. So it's just like, I don't know, people are revisiting Dalio.
Yeah, right.
And it just makes me think that maybe we don't need an AI
No,
version
well,
of
I
an
imagine
aging an aging narcissistic billionaire.
Yes, I also imagine this will be it'll be a highly curated
definitely.
Responses. What's coming out will be certainly in line with the persona that Ray Dalio wants.
Now, look, we've just blown up any chance of getting Dalio on the show or anyone from Bridgewater. But I think when we read that, we were like, this is
classic billionaire behavior.
Yeah.
Big time. Anyway, if you've enjoyed the headlines, you can keep up with many more in our daily newsletter. A link will be in the show notes for you to sign up. We send you headlines that are important as well as questions answered by experts from the community. So sign up to that. So reporting season continues. It's that time where companies update the market on how they are going. And today we've got results from Nvidia as well as a bunch of well-known Australian companies. So Ren, we've got to start with Nvidia.
Yeah, we and every other finance, media company, meme account, podcast.
I know. I was on Instagram this morning and there was like memes just leading up to the result, let alone from the result. I was just like, get over it.
Yeah,
honestly.
Like, it is an incredible story, but the idea that so much sentiment is driven by one company and like the spillover effects that sentiment has on like the broader, not even just tech ecosystem, but market generally. It's like, it's going to be a problem at some point.
Definitely. But talk us through it. What happened? Was it worth the hype?
So here are the numbers.
Nice.
Revenue of $30 billion for the quarter, up 122% year on year, up 15% from the previous quarter.
Okay.
Yeah. So growing quickly.
Very solid.
But they've been raising prices and their margins have been improving because their products are just so in demand. Profit is growing faster than revenue. Net income or profit of $16.5 billion. So just pause on that for a second. That means their profit margin is more than 50%.
Yeah.
But that net profit number is up 168% year on year, up 12% quarter on quarter.
Wow.
So they are crushing it.
Yeah.
But the question is, expectations were sky high. How did the market respond?
Well, so they actually beat expectations in terms of revenue, but the market is down 7% after hours. Can't win.
Well, when expectations are so high...
But they beat expectations.
I know, but now it's like a shell game.
It has to be like you have to smash expectations.
No. It's like we set expectations, but then they've also set the expectation that they will beat those expectations.
Yeah.
And so it's like everyone...
It's a margin of beating.
Everyone baselines expectations, but then everyone also internalizes the idea that we should expect a X percentage beat.
Yeah.
And so it's like, what are those dolls that you open and there's like another doll?
Yeah, the Russian dolls.
Yeah, that's right, because it's like there's just so many layers to this thing now. But it's just noise.
Yeah.
The fact of the matter is Nvidia's crushing it. If you're an Nvidia shareholder, you should be happy because they continue to grow. And if they keep doing what they're doing, you'll be fine in the long term.
Yeah.
Like the analysis should be on Nvidia as a business, not on earnings expectations.
Well, they're doing a $50 billion buyback as well, and they've guided a higher revenue for the next quarter of $32 billion. So things are looking good. All right, Australia. Let's bring it back home.
Yes.
Zip, we've spoken about.
Yeah, Australia's very own meme stock. They have turned their first ever profit.
Well done, Zip.
Blink and you might miss it, but after a couple of years in the wilderness, Zip have like really emerged as I would say, as a stronger business.
Definitely.
Revenue of $868 million, up 28% from the previous year, and a $3.6 million profit, a turnaround from a $377 million loss last year.
And the number that staggers me the most, Ren, is because of that, the market is starting to pay attention. The stock is up 283% year to date.
Yeah. Now I want to give a quick call out to the Zip investor relations team because they screwed up a little bit.
Okay.
So normally on when a company reports, they'll release their Appendix 4E, sometimes with their financial report in the same document. And normally in the Appendix 4E, it will have revenue and then profit brackets loss from ordinary activities. Now, Zip must be so used to making a loss.
Oh, they just had loss.
Because they just wrote loss from ordinary activities.
Oh, no.
And then they did the brackets with the numbers. So like previous year, 377 million in brackets as a loss. And then this year, $3.6 million profit. But Zip, you didn't make a loss. You made a profit.
Missed
so
a chance.
Update your document and write profit, brackets loss.
Oh no, we'll have to send that through. Miss your chance. But the main point is that they made a profit.
They made a profit.
Well done to them. Secondly, Guzman y Gomez listed a couple of months ago, and they are above prospectus forecast. Shares are at $35, Ren.
Yeah. So what
shares are ripping.
What you mean by above prospectus forecast is when they IPO'd, they said how they think they would go.
Yeah.
And so when a company is freshly IPO'd, that's kind of what they're judged against. Are they hitting those numbers that they forecast? And they're beating them slightly, but they are, revenue slightly, about 1% ahead. Profit about 15% ahead. But if we actually look at the numbers, revenue was up 32%. 342 million. They still made a loss. They were not profitable. They lost 13.7 million. But as I said, that was sort of 15% ahead of where they were. So they lost less than they forecast. So shares jumped. Everyone was pretty happy.
Yeah, shares at $35 and a market cap of 3.6 billion.
Yeah.
Crazy.
Yeah.
Absolutely crazy.
Let's keep moving because there's a number of companies we want to touch on quickly. Gambling's pretty big in Australia, you would say?
We have spoken about it, yes.
You'd think that if you were going to choose one company where you probably could do all right, gambling.
Yeah.
Turns out Tabcorp still made a loss.
Yes. Ex-AFL CEO Gill and McLachlan, he now is the CEO of Tabcorp, sharing his first earnings report. And unfortunately, it was worse than expected. Higher costs, lower market share, and the share price got pumped down 15%.
Now let's turn to the supermarkets, Coles and Woolworths, our respective former employers. Coles might be the little brother, but it is taking market share from Big Brother.
Yeah, not concerned, to be honest. You're right, though. Woolies has lost out. They say it's because of the tumultuous time that Woolies has faced since CEO Brad Banducci stormed out of an interview on ABC. I'm not sure that that's what's driving it. But anyway, Coles' profit is up 2% to 1.1 billion.
Yeah.
Woolworths' profit slightly down. I think it was 1.7.
Two more companies that I think are worth touching on as we close out reporting season. There's so many companies to cover. Again, if you want that daily update of what's happening, our daily news brief email is the place to go. But we thought it was worth touching on 9. Legacy media, it is struggling. We've spoken about it on this podcast. Revenue was more or less flat. Revenue was down 3%. Profit down 22%.
Oof.
Now, this didn't include the Olympics. The Olympics was in financial year 25. So we'll see those numbers later. They reckon it was profitable. It felt like they did pretty well out of it. So they'll see a bump next year, you would assume.
Yeah.
But structurally, legacy media, not a great place to be.
No.
Digital media, great place to be. And then finally, let's touch on BHP, Australia's largest miner. Tough time to be a miner at the moment.
Yeah.
BHP shut its nickel operations, or at least temporarily suspended them earlier this year because the nickel price is falling. Now they're dealing with a falling iron ore price, which is now below $100 a ton. That's the lowest level in like 20 months. The reason it's falling is Chinese steel mills are seeing weak demand for their products, so they're buying less iron ore. That demand being driven by, like a slowing property market, slowing Chinese economy more generally. So BHP cut its dividend, even though underlying profit was up 2%, because it wants to reinvest in non-iron ore projects, particularly potash and copper. But Aussie investors love a dividend, and they did not like the fact that BHP cut theirs.
This is not financial advice.
Yes, it is that time where we celebrate some of the worst financial advice that we've come across online, on social media, wherever we find it. And we love celebrating it. Well, I love celebrating it, but I also am celebrating it with a heavy heart today, Bryce.
Okay.
Because our time in the sun is over.
Uh-oh.
We've been surpassed.
As in?
We had a great journey sharing our knowledge and our journey of learning to invest, of building a community of like-minded people who wanted to figure out how to invest.
Yeah.
But sadly for us, we've been replaced by younger and smarter investors.
Impossible. Bring them in. Bring them in.
Well, we can't bring them in because it's a truly global medium.
Oh, no.
But I've got a number of examples.
Hit me.
Unfortunately,
are we going to go through our competitors?
These are the new generation of equity mates that are sharing their financial knowledge online.
Okay. I can't shit on them too much because I'm sure we were at this point at some stage, but let's listen to what they have to say.
I didn't realize it, but 100% of the trades I've taken this year that were calls, so I trade options, right? So all the calls I've taken, I've won 100% of those.
In the bear market?
This year to date.
Whoa.
In a bear market, 100% of the trades that I've taken were calls, were 100% winners.
See, we've been surpassed.
We've been surpassed, true.
No.
I've never had 100% of my calls
to be honest,
pay off.
no
I've
investor.
actually never done a call.
No investor has 100% of their trades coming off, you know?
Never.
Now, for people who weren't watching that on YouTube and didn't see that clip, that was about a 20-year-old guy wearing a full suit, pinstripes and everything. Yeah. So not only is he investing better than us, but he's dressing better than us as well.
Next episode, I'm coming in a pinstripe.
And this is the theme here today, Bryce. These are young investors who are just beating us.
The main reason why people aren't millionaires, in my opinion, is
sounds
because
like
they're
he
looking at
hasn't
money
even
from the
hit
wrong
puberty
angle.
yet.
They're saying, how can I make $1 million a year? When they should be saying, how can I make $2,739 a day? If you think like that, every day...
Now,
look, credit where credit's due, breaking down big, hairy, audacious goals into bite-sized chunks.
Okay.
So credit where credit's due, but yeah, $2,900 a day.
Yeah?
No. Wow, he's young.
He's a kid.
Yeah.
All right, but it doesn't stop there. It keeps going.
Here's how to make $1 million or more with very little effort. Whenever you go to a hotel, get a bunch of free soap instead of buying it from a store. This will save you on average $45 a month. Then if you invest that into the S&P 500, you're estimated to have over $1 million by retirement.
I mean, that's not bad.
That's one of my favorite videos.
That's not bad.
What do you mean it's not bad? First of all, who spends $45 a month on soap?
True. Okay.
And secondly, if you're going to hotels and stealing the soap, you're not factoring in the cost of booking the hotel room in that math.
Okay, what I'm referring to, the not bad bit is the put it into an index fund for 40 years. At least there was some sense of decent advice with that, realistic advice.
To be honest, maybe that's his strategy, like controversial viral hook, leading into
something
good
legit.
investing advice.
Yeah, that he can't get too much slack.
This is what I'm saying. We've been surpassed.
Damn it.
I've got 2 more to play for you.
Okay.
Here's how to find out if your friends are going to help you get rich or not. I want you to text every single one of your friends this weekend and let them know that you have a mind-blowing business idea. Now, I don't want you to text them back for a week, and now you need to see which one of them follow back up and text you a week later saying, let's get going. The ones that actually follow up with you, those ones you need to keep in your inner fucking circle until the day you fucking die. Any of the other friends that do not text you back, they believe you, they're lazy, and they don't want to build wealth. You need to cut them from your inner circle and move the fuck on. The amount of people I've seen that just say and talk about how they're going to do this, how they're going to do that, but never actually take fucking action. Bro, I don't got time for that. It's time to make some fucking
Wow,
moves.
this is an intense video.
No, the backing music.
Wow, that was intense.
See, have you ever done that?
No, look,
that's why you're being
No, I
surpassed.
haven't. But we have had weekends away with friends specifically for whiteboarding ideas. Let's put it that way. Nothing wrong with that, but I think cutting friends out of your group just because they don't want to follow a silly business idea, not the right advice. Not the right advice.
Yeah. Now, Bryce, one more video.
Okay.
It seems like these investors keep getting younger and younger.
Yes.
And that's not going to change if this last video is
If
any
this is a
indication.
baby.
My daughters will never have to work a day in their lives if they don't want to. First, they're homeschooled, so we're already preconditioning them to live their life with complete freedom, even as adults. Second, I'm teaching them the skill of day trading so they can create unlimited passive income straight from their phones, anytime, anywhere, any place. This is my daughter showing me her trades.
This is the daughter showing what
Now, for context for people listening to that, there were 3 daughters that were probably ranging from 5 years old to 8 years old, and they were all on their phones day trading.
They can earn income straight from their phones. Oh my goodness.
So just one other thing about that is a lot of people talk about day trading as passive income. Like that video said, I'm teaching them day trading so they can make passive income.
Yeah.
If you were day trading, you are not making passive income. You are trading each day.
I think the misconception there is that they're not working for anyone.
Yeah.
And they see that as passive income. But no, passive income is where you make income when you're sleeping.
Yes.
Make sure you subscribe to our Instagram channel where every Friday we do a wrap and celebrate some of the best and worst financial advice around.
Yeah, and if you enjoyed listening to that segment on the podcast, we now post all of our Equity Mates segments on YouTube.
Yeah.
So you can go and actually watch those clips if you want to relive some of that questionable financial advice.
You'll also see us in studio iteration number 28.
Yeah, it's very dark in here.
Very dark. Anyway,
black curtains.
Ren, we'll leave it there. Always great to chat stocks, markets, and everything in between, and we'll be picking it up next episode.
Sounds good.
Equity Mates. I will say this about investing. Everything you do learn is cumulative. What I learned at 20 is useful.